$268 million in stablecoins on the XRP ledger. That was the number back in December. Today, that number is $568 million in 3 months. While you were watching the price bleed, the actual money quietly doubled on the ledger itself. And when I traced exactly where that money is coming from and where it is heading next, what I found changes everything about how you should be thinking about XRP at $1.41. Welcome back. XRP is trading at $1.41 today, and I want to start with something that most creators are skipping over entirely because the price chart is depressing and nobody wants to talk about what is actually happening underneath it. But that is exactly the problem. When you only watch the price, you miss the build-out. And right now, the build-out is accelerating at a pace that is not reflected in any chart you are going to find on YouTube today. So let me walk you through what I found, starting with the stablecoin number, because it is the one data point that should have every XRP holder paying attention. Subscribe to this channel if you want XRP analysis that actually gives you a plan instead of just hype, because what I am about to walk through is the kind of layered picture that most people in this space are not putting together. Here is the core thing you need to understand. Ripple has spent the last 12 months quietly assembling the most complete financial infrastructure stack that any crypto company in the world has ever built. And I do not say that for hype. I say that because the regulatory filings, the OCC documents, the stablecoin data, the on-chain metrics, and the comments from Ripple's own global co-head of policy last week all point to the same picture. They are not building a payment company. They are building the plumbing for a $3 trillion industry. Lauren Belville, Ripple's global co-head of policy, made something very clear in a panel discussion this week that I want you to hear. She said the stablecoin market right now sits at approximately $314 billion, and she believes the first leg of that growth from 0 to $314 billion was driven almost entirely by retail and crypto investment. But the next 10 times from here, the institutional leg, that is what is coming. And Ripple and RLUSD are positioned directly in the path of that capital. Now let us talk about what that means concretely. Because the 3 trillion number is not a wish, there is independent research backing it. And the infrastructure Ripple has been building over the last year is specifically designed to capture a piece of that market. RLUSD, Ripple's regulated dollar-backed stablecoin, just crossed $1.6 billion in market cap. To put that in perspective, it hit 500 million just 7 months after launch. That makes it one of the fastest growing regulated stablecoins in history. And a recent Ripple survey found that 74% of finance leaders now see stablecoins like RLUSD as key tools for cash flow efficiency. That is not community sentiment, that is institutional demand. But here is where it gets even more interesting. In December 2025, Ripple received conditional approval from the Office of the Comptroller of the Currency to establish Ripple National Trust Bank, a federally supervised institution. What does that actually mean? It means that RLUSD will now be subject to dual regulation, both federal oversight from the OCC and state oversight from the New York Department of Financial Services. That is something that no other stablecoin issuer can claim right now. Not Circle, not Tether, nobody. And when Lauren Belville's team walks into a meeting with a major bank and says our stablecoin is regulated at the federal level, the conversation changes entirely. Now add to that the OCC rule that went live on April 1st of this year. The rule clarifies that national trust banks can conduct non-fiduciary activities, including digital asset custody and stablecoin-related operations. That is the legal plumbing that lets Ripple plug RLUSD reserves directly into the National Trust Bank framework and potentially hold reserves via Federal Reserve correspondent relationships. This was not an accident. This is a years-long regulatory chess game that Ripple just won a critical piece of. This is not financial advice. I want to be clear about that. I am sharing what I am personally tracking in this data. Let me give you the on-chain picture, because this is where the stablecoin story connects directly to XRP, the token. Daily transactions on the XRP ledger have climbed to 2.7 million as of March 2026. Total value locked in XRPL DeFi has grown nearly 100 times in the last 2 years and recently crossed the $100 million milestone. The network now hosts tokenized real-world assets valued at approximately $461 million, and the 7-spot XRP ETFs currently trading in the US have absorbed over 773 million XRP tokens into custody. That is supply coming off the market permanently into institutional hands. Yet XRP is at $1.41. And if that makes you feel frustrated, you are not alone. This is the exact disconnect that the community is struggling with right now. Every piece of institutional infrastructure is clicking into place, but the price is not reflecting it yet. So let me tell you what I actually think is happening. The price of XRP right now is being suppressed by 3 things that have nothing to do with Ripple's fundamentals. First, geopolitical fear. The ongoing Iran situation and macro risk-off sentiment is hitting all crypto assets, not just XRP. Second, a large supply overhang. Approximately 60% of XRP holders are currently underwater, and that creates selling pressure whenever there is any bounce because people are trying to break even. Third, the Clarity Act is not law yet, and until it is permanent law, institutional allocators at scale are not going to commit billions. And that third factor is actually the most important thing you need to understand. Heading into the next 90 days, hit the like button if this data is opening up a different picture than what you have been seeing on other channels, because what comes next is where it gets very time sensitive. Senator Cynthia Lummis stated on March 19th that the Senate Banking Committee intends to mark up the Clarity Act after Easter. Brad Garlinghouse himself has put the odds of that bill passing by late April at 80%. Polymarket currently shows approximately 70 to 72% odds. But here is what Galaxy Digital warned, and what most XRP creators are not telling you. If the bill does not clear committee by the end of April, it is likely dead for the rest of 2026 because midterm election dynamics take over. Standard Chartered, which previously had an $8 XRP target for this year, already cut that target to $2.80 based on the assumption that the Clarity Act faces delays. That is how important this window is. Now on the positive side, the March 17th joint ruling from the SEC and CFTC classifying XRP as a digital commodity is genuinely significant. XRP now sits alongside Bitcoin and Ethereum in the digital commodity category, and the original source video made a great point about this. With 16 assets now classified as digital commodities, a newcomer looking at Bitcoin and XRP side by side is going to ask a simple question: what can each of these actually do? Bitcoin is a store of value. XRP has payments, stablecoin infrastructure, real-world asset tokenization, DeFi lending protocol, institutional prime brokerage, and a 67-country payments network processing over $15 billion annually. That is a fundamentally different value proposition on the same regulatory tier. And then there is Missouri. A House bill there just received committee approval that would create a cryptocurrency strategic reserve fund, authorizing the Treasury to hold Bitcoin, Ethereum, XRP, Solana, and USDC as part of Missouri's official state reserves, with a mandated minimum 5-year holding period. This is still a bill, not law, but the fact that state legislators are now naming XRP in reserve frameworks tells you something important about where the regulatory perception of this asset has shifted. Share this video with one XRP holder who needs to understand why the price chart is not the whole story right now, because this institutional infrastructure picture is not something that shows up in a price candle. Let me bring this back to where we started. Stablecoins on the XRP ledger going from 268 million to 568 million in 90 days is not a coincidence. That is positioning. And when you layer in the OCC Trust Bank approval, the RLUSD growth to 1.6 billion in market cap, the SEC digital commodity ruling, Goldman Sachs holding $153.8 million across 4 XRP ETFs whale wallets, adding 1.3 billion tokens in a 48-hour window just weeks ago, according to sentiment data, and now a clear legislative timeline through April. The picture is not bearish. The picture is of an asset that is being accumulated heavily, while most retail holders are distracted by the price going sideways. The question is not whether the infrastructure is real. It clearly is. The question is timing, and the April Clarity Act window is the most important timing catalyst this community has seen since the ETF launch. If it passes, Standard Chartered's revised $2.80 target suddenly looks conservative again. If it stalls, we are likely in this range through the summer while the macro picture sorts itself out. Comment yes if you think the Clarity Act clears committee before May, and comment no if you think it stalls. I want to see where this community stands, because that vote is the single biggest near-term catalyst for XRP, and I will be doing a dedicated video on exactly what to watch for in the Senate markup proceedings. Make sure you are subscribed so you do not miss that coverage, because the next 60 days for XRP are going to matter more than the last 6 months combined.